Welcome back, everybody, to another episode of Alt Reports Radio, where I'm here with John Kopiak, a good friend of mine and a local Bend resident. And today we're going to talk about investing in solar. John has, I think, a pretty interesting sort of creative real estate background before he got into what he's doing now. And I'll let him tell you about that. But he is at the forefront, in my mind, of what's happening in our transition for energy. And he's leading the way in solar investments. And so we want to talk about that. John, thanks for being here today. Really appreciate you jumping on Alt Reports Radio.
Thank you, Breck. I really appreciate the invitation and looking forward to talking with you here. So where should we start with the history of real estate?
So why don't we talk about, you've done some pretty cool stuff, tax liens and seller financing and all that kind of, can you talk a little bit about that? Because we've got a big real estate crowd on here and I know they'd love to hear about it.
Sure. So 20 years ago, I started a business that purchased tax liens all over Central and Southern California. And the idea there was basically buy cheap land. A lot of it was out in the desert of California because that was cheaper than along the coast and more available, and then resell it largely on terms. So the idea was buy a lot for $10K, sell it on terms for $25K, and do that over and over and over. Yeah. And I did that hundreds of times. And that went largely very well, especially in the early 2000s. And then along came 2007. And so that was a very scary time because the price at the auctions was over retail. And then the price that you could sell them again was really pitiful. All investors were kind of out. But there was a shining glimmer of hope there, and that is renewable energy. I bought a number of properties that happened to be inside enormous wind and solar farms. And the developers of those farms immediately leased those properties that I had. And they asked me, hey, do you have any more that you could lease to us? And so I started specializing in renewable energy real estate. Wow. The idea was buy land at tax sales and immediately lease it, or sometimes option it to some of the biggest wind and solar farms in California.
So let's break that down just in case we've got folks who are not initiated there. So a tax lien, how does a tax lien work there in California? What's that mean?
Sure. So every county in California sells land and sometimes houses that folks don't pay their taxes on for at least 7 years. Okay. Like if you have a house and you never pay your taxes, about 7 years in, the county will foreclose on your property and then sell it to the highest bidder. And these are cash auctions. And a number of them are online now. Most are online in California. Some small areas you can still go on a particular day once or twice a year and raise the paddle and buy real estate for cash.
Okay. So you're doing that, you're buying these, then you're selling them and holding the paper, right? And so you're getting, is that right? Okay.
Yeah, that was the strategy.
All right. And then we've got the financial, the GFC happens. And I think anybody who's in real estate at that time knows what, we hear you on, what that was like. I was in the thick of it too. So how do you end up did you just start reaching out to solar? Because you and I have talked a number of times over, dinner and whatnot. And you have like a handle on the grid, like you understand where the stations are and all that kind of stuff. How did you find all this out? Like just tell us a little bit more about your transition there into the solar, because that seems like figuring out how to get power companies to option your land, from you sounds like pretty far out, I think, for most real estate investors.
Well, it was a full-time job to figure out who was developing in California and what land they wanted to use. And so some of the biggest companies, they would determine maybe a 5 square mile area and say, this is going to be our footprint. And then they would hire consultants to go out and lease or purchase all of the land in those areas.
Okay.
And California happened to be subdivided, sometimes down to 2.5 acres.
Wow.
So there are solar and wind projects that have hundreds of parcels in them. And so once I got to know these consultants, they were happy to have someone that would go do the legwork of weeding out all of the holdouts and then offering the properties back to them to lease on usually 35-year leases.
Okay, so you've got this big expanse of land and all these tiny little lots, and you're just kind of pulling them all. Your work is pulling them all together, it's almost like arbitrage on. Yes, okay, got it.
Right, and big companies want to move in big strokes. They don't want some to buy, some on options, some on leases. They would prefer to just lease a whole area and do it all in a certain window of time, maybe 6 months or a year. And so cooperating with them was very helpful, I think, because they would tell me which parcels that they wanted to use, and then I would go after those properties, buy them out. A lot of owners were either up in age where they weren't interested in 30 years of payments, or they just didn't believe that solar and wind was really viable.
Yeah.
But now that there are days that California runs entirely on renewables, I think it is proof. And then you have 33 states that have renewable mandates.
Okay.
In Oregon here, we have a mandate that the state has to be 100% renewable by 2040.
Wow.
Same goes for California. That has to be 100% renewable by 2045.
Okay.
And 50% renewable by 50% by 2025 and 100% by 2040.
Okay.
Anyway, most states have these types of mandates now, and so there is a very strong push within most states to become renewable.
Okay. So in those early days, so you go and you put this land together and you're leasing it to you start leasing it. What did those? And is that when you decided you'd open a fund? You needed some more capital and you began a raise? Tell us about that.
Sure. So I started buying properties in wind and solar farms and leasing them out, and that went great. And pretty soon I ran out of money, and I talked to all my friends and neighbors, and I started a fund to do exactly that.
Okay.
And so I'd start a fund, collect money for a couple of years, buy as many properties as we could, and then close the fund so that those investors knew exactly what the projections are for all of the parcels that we bought.
Okay.
And over a series of about 10 years, I started 5 funds, and they're still operating.
Okay.
And so we have dozens of wind and solar parcels in some of the biggest wind and solar farms in California.
Wow. So what are we talking about for what have you raised over the years?
About $10 million.
Okay.
And it's all from accredited investors with an average of $100,000 investments.
Okay. And so are you at a place in these funds where you're able to start to get some sense of returns for that?
Absolutely. So, it varies quite widely, but it's about a 10% return year over year over a 35-year period.
Okay.
And it comes with the, what would you call it? A little bit of the ideal that what we're doing is we're changing the grid across the United States. And so this isn't oil money or what have you. This is improving the air and sometimes water for our children and grandchildren. So while those returns are good, over time, I noticed, the developers are making quite a bit more money than the folks leasing land for these projects. And that kind of brings us a little bit more up to date in that we started a company called Shasta Power.
Okay.
And within that company, I do the real estate work primarily, and we develop our own solar farms using private equity. And then we have payouts over a 4-year period.
Okay.
As we get the land, we do the environmental work, we hire out um, a lot of the legal and a lot of the permitting, and then we end up selling the properties or selling the solar farms once they are ready to build, or what we call notice to proceed, the date that they become shovel ready.
Okay. So you do all
So,
the initial work of identifying where these should be, getting them permitted and everything legal, and then who's buying them from you,
sure.
or are they
So there
leasing?
are a number of no, they're purchasing them.
Okay.
We end up buying, or we end up leasing the property or buying it on option. So
Okay.
it's either a 35 or 40-year lease, or it's an option to buy in 5 years, and
Okay.
that keeps our risk down. But we've studied hundreds of areas across the country that would be good for solar. We look at irradiance, connectivity to the grid, terrain, the landowners, like who's interested, who's not, uh, prices. We filtered out hundreds of locations, and we've boiled this series down to 6 solar farms that we're currently developing.
Okay. And where are they?
And the sure, one of them is right here in our state of Oregon.
Okay.
We have a small one in Illinois, and then we have 5 more across Oklahoma and Kansas.
Okay.
And um, and our history is in California, or at least my history from wind and solar farms. And a few years ago, we leased up about 1,500 acres for a solar farm north of Los Angeles,
Okay.
and we raised about $2.5 million for that solar farm. And then we sold the solar farm to a much bigger developer. I can't share the exact number, but it's for multiples on our money on that
Okay.
sale.
Nice.
And the sales go, yeah, we were very excited.
Was that
We,
is that when you decided, okay, we're going to stop holding these long term, and we're gonna flip these, for lack of a better word, to folks?
well, it's very expensive to build some of the solar farms.
Yeah.
For example, a 100 megawatt farm, which would power 50,000 houses, that costs maybe 200 million to build,
Wow.
and we just didn't expect uh, to raise that kind of money or to have that enough credit for that. So our realm was more in the $5 to $10 million range. And so the idea is if we raise $10 million and we kick off 6 solar farms, we could sell each of them for multiples on that money, and then return a very healthy profit to investors.
Okay. In a much shorter
Um,
time frame than
yeah,
your pre.
exactly. So we're
Yeah.
able to get our capital return in 12 to 18 months,
Okay.
and then pay a multiple on the money in 2 to 3 years.
Wow. So let's talk a little bit about. I mean, this sounds great. You have these, like, you have the end buyer is like a big, well-funded corporation, and we've got this push in the country finally for more green, more renewable energies. There are risks out there that you can see, because as
Absolutely.
we look at the rest of the market, like, there's a lot of struggles out there. And so what are there headwinds that you're concerned about, or
Absolutely.
regulations?
Well, politics is probably the toughest risk to navigate. You never know what Congress will decide what to do.
Hmm.
Recently they passed the Inflation Reduction Act, which
Yeah.
which um, uh,
Won't actually reduce
which
inflation.
well, I'm
That's
no
just an
economist.
opinion.
I can't speak. What it
Sure.
did do is it extended our tax credit.
Yep.
We have a 30% investment tax credit that has come and gone over the last 20 years, and it's
Okay.
been extended for many years. So that's very helpful. Like if we build a site for $100 million, there's a $30
Yeah.
million tax credit.
Where does that tax credit, what does it apply to? Who's that for?
It applies. It applies to wind energy, to solar energy. It applies to private residences if you decide to put solar on your house, or
Okay.
community solar projects, or big utility grade solar projects like we're
Wow.
developing. So,
Okay.
yes, so it's super helpful. So where were we? So
We were
anyhow,
talking
we're
about risk.
developing six.
Yeah.
Oh yeah, risks. Excuse me.
Yeah.
So some of the risks that we've encountered are we get really excited about a site, we get several landowners interested, and then maybe one that's key decides not to go with us, or they
Okay.
decide, hey, we want to keep farming this property. We don't want it to be solar after all, or maybe there's a squabble in the family or something like that.
Yep.
And we've had a couple of those failures, and those have added up to maybe a $20,000 loss.
Okay.
And so it's disappointing if we do the title work and site visits and legal leases and everything, um, but but our gains can be so much bigger. Like I said, if we have a maybe a $1 million capital invested in a solar farm, we can sell that when it becomes buildable for multiples on that $1 million.
Okay.
And so the gains are much larger than the losses.
Right.
We might be able to sell that for several $1 million. And if you want to talk with me privately, I could get a little bit more clear on what these multiples are, but it's definitely in multiples.
Okay.
And a failure might be $20,000, and so the gains drastically outweigh the losses that we have incurred.
For sure.
And another thing to keep in mind is when we have a queue position at a utility, which is basically a reservation to sell power and connect at a particular location, we entered one for $400,000, which is a huge chunk, but that's refundable if the project were to be stopped. Less any cost that the utility incurs, but generally that's refundable. So most of the investments that we make are refundable, or they're just small enough to stomach. Like if we spend 10,000 on title reports and maybe 10 or 20,000 on some early leases or options, that's at risk. But the large utility reservations, those are refundable. So the risk is very much mitigated.
Okay. And so are you raising now? Is your fund open?
Yes, it is. So it's accredited investors only.
Yeah.
It is open. We have raised approximately $3 million now, and our
Okay.
aim is to raise a total of $10 million over the next year.
Okay.
And we pay an interest rate on the funds, and we have a profit sharing of 60-40, 60% to investors for getting involved. And our intention is to start selling the projects next summer, and then we'll sell them all over the next 2 years. And
Okay.
so we'll see a large capital return next year, and then complete capital return in 2024, and start the profit sharing process in 24 and 25. And we hope to be finished in 4 years, but it kind of remains to be seen. But at least we'll have a capital return very quickly.
So you already have projects underway in this fund.
That's right. We have 6 projects underway, and they're in different stages. Like a couple of them we have land control. One we have a large queue position. One we've kind of petered out. We were hoping to make it large, like 200 acres. We only got 50 acres, and so since that was kind of too small for us, we sold it for several multiples on our money.
Wow.
And we wanted to focus on our bigger sites. Right. So, we do have 6 projects going currently. And some folks have asked, if you don't raise the full 10 million, what happens? And the answer is we'll kind of sell some of our sites prematurely for maybe 100% gain instead of several multiples. But our hope is to bring these all to buildable and then sell them at that time when they can be the most profitable.
Okay. So a lot of times when we hear about funds, we hear things like 2 and 20, and it sounds like you've got a completely different model than that. Tell me a little bit about that. You mentioned you're paying interest in the interim, but it's not a debt fund, is it? Or is it a debt fund?
No, there's no debt at all. It is
Okay.
all private equity. And so how it works is the management, there's 3 managers, I'm one of them, and we charge a 6% annual fee on
Okay.
capital raised. And we also pay an interest rate. Currently, we're paying a 7% rate to investors. And then
Okay.
once the capital is returned, both of those go away. We no longer earn the 6% management fee, and the interest to investors is gone. But then we share profit 60-40, 60% to investors.
Okay. Got it. Cool. Yeah,
Does that make sense?
that's a different arrangement than
Yeah,
you hear about most of the time. Yeah. How did you come up
it's
with
totally
that?
different.
And what is the purpose
Uh,
behind it?
Sure, great question. Well, we needed some money for all of the work that we're doing, so we had to charge a management fee. To develop 6 sites simultaneously is a huge lift,
Sure.
and so we needed to have some income there. We also wanted a carrot for investors to invest now instead of being the very last investor next year sometime.
Yeah.
And so we decided to pay early investors a 10% rate, and that kind of dwindles as the fund grows and the risk goes down.
Okay.
So we are paying the earliest investors 10%, but now that we've got 6 projects moving forward, we're paying 7.
Okay.
As our risk and our size progresses, we're going to pay all the way down to 0 on the rate, just because we don't need the money as badly at the end.
Sure.
And so that's how we came up with the rates, and the 60-40 we thought was very fair in that we pay the rate first, and then we pay capital back to investors, and then the income is shared 60-40.
Okay.
And if you were to see the numbers on these, like I say, that we're selling the sites for multiples of on our money. The income to investors is very high,
Okay.
and the risk goes down substantially after we return capital next year in 2024.
Okay. So if you had to characterize this as low, middle, or high risk, how do you feel about?
Well, that's a great question. So our experience is we had a big solar farm sale in California, and it went very well, and so we batted 100 there.
Yeah.
But we do expect a failure here and there. We've had some early failures where we poured in maybe 20,000 to a site and had to abandon it.
Yeah.
And that was tolerable with a $10 million fund.
Yeah.
But we only need one site to be successful for the entire fund to be profitable.
Yeah.
Of course, we want all 6 to work out. So I would say each site has an 80% chance of success.
Okay.
Especially once they get going. And so, sure, out of 6, it's likely that 1, maybe 2 would fail. But even with that ratio, investors will still make multiples on their money over the 4-year period. So yes, there will be some failures. It is, like I say, there's political risk, there's risks of competition.
Yeah.
There's several risks, but they're not fully weighted, because when projects are just starting, that's the riskiest. But we have
Yeah.
very little on the table when they're starting. Once they're a year in, the risk goes down and our investment in them rises. But the biggest capital commitment are these Q positions, and those are refundable. So like I say, that's another reason we started 6 sites, so that if 1
Yeah.
or 2 fails,
Yeah.
we can handle that.
Yep.
The chances of all of them failing is really low.
Yeah.
And even if that happened, all of the queue positions would be refundable. So the majority of our capital would still be there.
Right. So you're really only talking about potential loss, even if it was, 30 or 50 per site, you're still not talking about a tremendous loss relative to the size of the fund. It's pretty small. Yeah.
Exactly. Yeah. I mean, if the whole fund, if none of the sites worked out, uh, which would be really, really surprising,
Yeah.
we might experience a 20% loss.
Yeah.
But I think there's maybe a 1% chance of that. It's possible
Yeah.
that Congress changes their mind and every state changes their policies, and
Yeah. I
who
don't see
knows,
that
the world
happening.
practically comes to an end.
Well, the world comes to an end. I'm not sure what you do with the cash anyway, right? So
Yeah.
yeah, wouldn't be
So,
much
I mean,
use.
there are political risks, but right now the Inflation Reduction Act is on our side, and we have 33 states that have renewable mandates.
Yep.
So it's very much an awesome time to invest in solar right now. We studied every major coal plant west of the Mississippi, and they all have solar farms being built in development right now. And
Wow.
so if you go in time 3 or 4 years and start driving around the desert, you will be amazed at how much solar is in development right now.
Wow. Well, that's pretty exciting. And I appreciate you jumping on here and talking through that. I think that, what part of and I'm not a financial planner, I'm not giving any financial advice, but part of my personal thesis going forward is that renewables is a place to invest, and it's a growth area, and we're not going back the other way despite all the fighting and politically and everything else. We're definitely doing this, and so it's just a matter of at what pace. And seems like you're really positioned like right there to be in the way of it, especially where you've got these 2 decades of background specifically in this space. So I think it's pretty exciting. If folks want to talk with you, how can they find you?
Yeah, please visit shastapower.com.
Okay.
That's the fund that's open right now with all of the new developments in it. And so, yeah, please visit shastapower.com and you'll see me and my partners there. And we're very active in the space, and that's the best way to reach us.
Okay, great. Well, thanks, John. Thanks for coming on, talking about investing in solar and renewables today. And I hope you hear from some folks from the show. And it's been great talking with you.
Thank you, Brett. I really enjoyed talking with you. I've known you for a long time. And again, thank you for the opportunity. We'll talk here soon.
My pleasure to have you.